Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's June 10th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. I have an awesome podcast for you today. It's going to start with a fantastic interview with my buddy, friend, Charles Payne. If you don't know Charles, he's the host of Fox Business Making Money with Charles Payne, founder and CEO of Wall Street Strategies, provides some great newsletters. Someone I admire a lot since we did a lot of segments together on Fox back in the day. We had a lot of fun. You get to see Charles behind the scenes and just to see how far he's come, has his own show, getting shout outs by the president. Really, really cool stuff. Influential person, especially what's going on, riots and everything. He's been, outspoken about it. Really cool. But Charles is a stock junkie like me, which means you're going to get a lot of great stock ideas, even some sectors to invest in. Well, basically rotate in and out of, right, in this volatile market. That's really what we're seeing. Not only we're seeing a lot of more money come in, there's a lot of money on the sidelines, trillions on the sidelines still from institutions, but we're seeing the rotation of money, right? It's this move higher that everyone's talking about in the past 2 to 3 weeks has not been from technology, which has driven the market incredibly higher off the lows, the March lows. It's not like more money going into everything. It's the shift in capital. If you can find out where that shift's going to be next, everybody's promoting autos in the past couple of days. Anything related to autos, throw in there. I mean, it even got filtered down to companies that were bankrupt, like Hertz and Chesapeake, right? Filed for bankruptcy. And think about that. Hertz has $19 trillion in debt. Their market cap is less than $1 billion. You guys learned this in high school. Not maybe college, when it comes to who gets paid when you go bankrupt. It's the bondholders, the creditors first. Well, Hertz, $19 billion in debt, and they don't have $19 billion in assets, even with their fleet. But who's going to get paid first? Those guys, before the common shareholders. So the stock's basically worthless, but yet we saw it when it fell to $1. Carl Icahn blew out of it, one of the greatest investors in the world, and it went as high as $5, $6. I think it's like 3 or 4 today. And pretty crazy times. Not telling you to rotate into stocks that are filing for bankruptcy. I had a joke on it in if you follow me on Twitter or Curzio Research YouTube page. As a Curzio Research is going to file for bankruptcy because our valuation is going to go more than double, which is great. I mean, in this crazy market, but great conversation, very important. Like all my interviews, you guys know me by now. The questions I asked Charles, they're not going to be layups. We are going to talk about racial injustice, the peaceful protests that are taking place all over the place as well, some of the violence being created by groups who are pushing their own agenda, how the media likes to cover that the most. I don't know if you're watching social media or the platforms, everything is just, it's the worst. Everybody wants to show the worst of what's going on in this historic event and how everyone's coming together, and everybody wants to show the worst. Because that's what gets the most page views. That's what gets people to post. That's what gets people to go crazy. That's what separates us, which is great for media, which is great for profits for them. We're going to talk about why there's so much hate in this country when, if you take out social media and you talk directly to people, it doesn't matter what party you're from. You could hang out with them. You could play sports with them, have fun. Families get together. Mention politics, you're no longer friends anymore. That's what they want. That's what they want. It's not what we want. We're going to cover a lot of sensitive topics, as well as really get into the stock market, since he has his own show, Making Money with Charles Payne. It's fantastic. So get out your pens and papers. Going to have lots of ideas to share. It's going to be a really great interview. Must listen to. Then in my educational segment, I'm going to go out and say this is going to be the most important educational segments I ever did on Wall Street Unplugged. Not building it up. I don't care if you listen or not. I will say I do care if you're a millennial. I want you to listen to this segment if you're a millennial. Pay close attention. It's all about you. It's from the heart. It's going to create tons of value Tons. Trust me on this. I'll bet my life on it. Get really personal and show you guys the right way to invest and why it's time that Wall Street starts paying attention to you. I'm not going to give away all the details, but really going to go in depth again. It's from the heart. It's not a rant. It's really cool. So I have a lot of millennials that have listened to this podcast. This one is for you. So definitely, please, please, please pay close attention to my educational segment. But before I get to that, let's jump right in with my interview with the one and only Charles Payne. Charles Payne, it's been a while since the last time I interviewed you at Wall Street Unplugged. Also been a while since we did segments together on Fox where I really got to know you, saw how much you care about mom and pop investors. Your own show now, doing fantastic. I know how busy you are. Thank you so much for coming on the show again. I really appreciate it, buddy.
Thanks, Frank. I've always enjoyed our conversations, and congratulations to you because you've been at the forefront of this stuff for a long time.
Thanks. Well, I'm going to start right off the bat, okay, because you've been doing this for several decades. Last week, I thought this was really cool, where the president of the United States, President Trump, gave you a shout out on Twitter for the job he did telling people to buy when stocks crashed. I would have to think that's one of the biggest highlights, right? It doesn't get bigger than that, does it?
It really doesn't. You know, he also went out in the Rose Garden and gave me another shout out. So it's pretty good. It's pretty special. And, you know, again, for me, it gets back to the people, Frank. When in the middle of March, when we were in a free fall, and as we started to turn, the first thing I said, March, late February, I said, there are two things. Please, please, please. Number one, don't take a big loss. Whatever you do, you're going to sell some stocks, and I think you're going to regret it. It could be a few months from now, a few years from now. That's number one. Then number two, if you have the wherewithal, this market's getting oversold, you should look to buy some stocks because this is a generational opportunity. So, you know, those are the two things I pounded. And on my show, I had a lot of good themes. When after that March 23rd low, every Wall Street expert, and I'm talking every single one that came on my show, and almost everyone I saw in the media said, we've got to retest the lows. You know, that old notion that you got to retest the lows. So as we started to go up, don't buy it. It's a head fake. We must retest the lows, like it's written in chisel and stone somewhere. And, I've looked back at past, cataclysmic market crashes, including 2009, and we didn't retest the low. So I don't understand. Sometimes these things become almost mythical, and everyone regurgitates and says the same thing. So I was really happy because a lot of people started to buy, and even with my own work, I started to find opportunities. So it's been gratifying, and for the president to notice is pretty cool.
Yeah, it was. And I have to confess, I was one of those guys. So, we were early. We got out of the market. China closed. China was closed down. We did a great job selling people out before the disaster. And I told them, I said, no one gets it right on the bottom and the top. There's no way you're going to do it. You're lucky if you get one of those calls right. So kind of late to the party. But what did you see? Because, even if you look back, you say you're looking back historically. I know you look at technical analysis as well.
Right.
But what was it? Because I'm going to give you a plug here. And it's not just a plug. It's for your book, Unstoppable Prosperity. This was published in May, guys, last year. Amazing timing. But your chapter 6 is titled Optimism in a World of Inevitable Corrections and Market Crashes. What was it? Was it more than that? Well, it won't retest the lows. Is it, trillions being printed by the Fed, cheap valuations? Even get more specific because I know my audience loves to hear that from someone that's brilliant.
I think all of the above, and I'm glad you gave the book Unstoppable Prosperity a plug. And, here's the interesting thing is chapter 6. When I first wrote the book, it was chapter 2. So my publisher was like, are you nuts? What the heck is this in the book for? We don't want to talk about stocks getting hit and corrections. And they didn't even want it in the book. So we compromised on chapter 6. So I think it was all of those things. But, the main thing I looked at was just how much economic momentum we had coming into the year. Just really, I'm talking like this was the year, Frank. This was the year. We had two headwinds last year. We had the housing was so-so, particularly household formation and manufacturing. They really started to show signs late last year that they were turning, and they really started to build momentum. home ownership in February was really through the roof, and new home permits and new home sales. Same thing with manufacturing, and of course, manufacturing has changed. And so when we get these GDP reports and they say, well, business investments are down, there's a construction part of that, the old smokestack factories that we're just really never going to get back to. Those actually peaked 4 decades ago. But IT spending, and I got to tell you, I went to McDonald's the other day, and the line was crazy. I almost got out, and almost just didn't stop. But I said, what the heck? I haven't been there in a long time, and there weren't that many options. And the line went so fast, I paid, I drove up to the next window, and I got my food, and it was hot. They didn't build a new McDonald's. They got new software. They got new technology. And that's where all the spending is going. So we had all of this momentum, everything you want. And it's sort of like if you're in a room and you've had the air conditioner on for a couple of hours. You can turn it off, and the room is going to still be cool for a while. So I always knew that was the backdrop. That this sort of momentum, even though we did hit a light switch and we completely shut down the economy, it was artificial. Of course, there's damage that comes out of something like this, particularly since I don't know if we've ever done anything like this before. And I really think a lot of people learn just how important it is that our economy is always moving. Like, to shut it down, you would think, well, we're America, we can handle it, but we couldn't, right? But we still had that momentum sort of lingering there. And then the swiftness of the Federal Reserve acting, the swiftness of Mnuchin getting those paychecks out to small businesses, you got to tip your hat to them. And listen, I was a Powell critic, particularly in 2018. Those 4 rate hikes I thought were nuts, but I do feel like he gave a speech in early January of last year. I want to say January 4th, where to me, he almost had an epiphany. And I talked about this over and over again. And there are a lot of big time Wall Street investors who just never picked up on this. He said wage inflation is not price inflation. So the old Federal Reserve playbook was always when Main Street started doing better, it was time to put up the speed bumps. That was my mind. He finally got it. You don't have to slow down this economy because the average man and woman on Main Street are doing better.
No, I love that. And going back to really quick, I have to mention this, as someone you've been doing this for decades, when your publisher told you that should be pushed to chapter 6, you should have pushed it to chapter 1, right?
I'll keep that in mind next time.
Always works that way, right? When everyone's against you, you're right. But the innovation part that you talked about, even when you're forced to do something, like it's almost very, very difficult, especially if you're over 60, you're set in your ways. That's just the way it is. Well, I'm going to be like that too. But when you have events like this that force you to do things, because you mentioned the innovation that was taking place behind the scenes, how much do you see companies changing? Because now it's virtual healthcare, right? The doctor's appointments, it's Zoom, Skype, work from home, which could be not permanent where 100%, but you see in commercial real estate, it's probably going to get, hurt here. But you're looking at different innovation. Do we need events like this to happen to where you see that this is going to be permanent? And which ones are permanent and which ones may just be for the time being? Because a lot of change has happened, since COVID-19.
It's really interesting because of where we were in the whole arc of innovation, is that there's nothing surprising except we just took the future and pulled it closer. We took what was supposed to happen over 3 to 5 years and we pulled it in 3 to 5 weeks. Something like a Zoom went public last year. Okay, popped a little bit at the open and just sort of drifted, not exciting at all. It was going to take them several years to build out that business model. Instead, it took them a few weeks. Before you knew it, everybody was having Zoom birthday parties or whatever. Telemedicine, we always knew that this was the future. For a decade now, you've heard not only in economic circles, but also political circles about this so-called work-life balance and the ability for businesses, employers, to allow their workers to customize their hours. And that would include perhaps working from home via the internet. All of these things and all of these business models were already in place. We just didn't think they would mature this quickly. It was like Jack and a beanstalk. We thought we were just going to plant this thing and let it water and grow. But because of the nature of the pandemic and the lockdown nature of the country, it sprouted quickly and went through the roof. Now the good news is that other things, a curbside pickup. Companies had curbside pickup, but it wasn't a big deal. You drive to the mall and you see the parking spaces for curbside pickup. They were never full, but they were there. Omni-channel for retailers. What does that mean? Shop online or during your lunch break. Maybe go in the store and pick it up while you're there, and then So all of these things, almost all of these things, were already in place, but we grabbed the future and we pulled it closer. Now, how much of it lingers remains to be seen. There's no doubt in my mind that there's been a massive shift. A lot of people are going to be moving to suburban areas, rural areas. The notion that I can work from home 3 days a week, it would be worth it for me to move out of the city. I'll commute the other 2 days I don't. So there are going to be some changes, I think. Young families, and this is good in my mind because you got young millennial families. The oldest millennials are 40. So you have these millennial families who are now household formation. Do you want to bring up the kids and have to worry about, living in a 40-story building and who touched the elevator keys, the buttons? Mm-hmm. So, I think there are going to be some things that we do different culturally, and I think they'll obviously have an impact on investment opportunities. And commercial real estate remains a question mark. There's no doubt about that. And I just let my lease expire. My lease happened to be up in May, and I grappled with it. Ironically, they played hardball initially, which was really crazy. And then I just decided I'm going to let it expire for now and try to regroup because my business is still doing very well under these circumstances.
Yeah, that's pretty incredible. And we're going to get to that business in a second. But I wanted to stay on this topic to the point where, we gave this shout out with the president, and it was amazing calling the bottom. And you've been in this market for a long time. So that it's not about the past, it's about the future, right? That's our clients talking.
Right.
So today the S&P 500 is trading around 23, 24 times forward earnings, highest valuation close to 20 years. That's based on around $100, $125 in earnings for S&P. So we're looking at a 25% expected decline in earnings for 2020, but then a huge rebound in earnings in 2021. Where we are today, are we priced for perfection here, considering, lots of risks out there, not just the coronavirus, but you're looking at China. China was slowing before this. We have a lot of tensions going on right now. You're looking at Europe was almost in a recession, but pre-coronavirus. We're going to see, the Disney parks, probably 85% is going to be the new 100%, right? Just you're going to see less people going out there, especially elders. But are we priced for perfection, or is it just, hey, there's always going to be ideas and rotation like we're seeing today?
I think the rotation story is sort of mitigating that. We talked about the Zooms and the COVID/lockdowns and ideas, and those stocks taking off in a way, a parabolic way to the upside. And then subcategories of semiconductors doing extraordinarily well. One of the first real big, strong segments of the market to come back, roaring back early on. I don't want to say we're necessarily priced for perfection, but I think we are priced so that we don't have another lockdown. I think the market, and this is what I was saying for a long time, when the narrative in the financial media was that the market's up on hopes of a vaccine, I didn't see that. I thought that the market was up because the market figured that we would learn how to coexist with COVID-19, get back to work, and find ways to prosper. I know, and I'm not a big fan necessarily of traditional valuations like PE ratios and things like that. I think that as the economy comes on and you have the bond yields go up, that 10-year gets over 1%. I think you'll see a fair amount of money start to come out of the bond market and find its way into the equity market. You've got $4.7 trillion sitting in money markets right now. So I think money is going to gravitate to the market, continue to gravitate to the market. I'm not saying it's one of those so-called Tina situations, where it's the only game in town, because in the last 6 weeks, and really for a long time, every single week, big money, billions of dollars have come out of equity, mutual funds, and ETFs. and gone into bonds. So it's not that it is the only game in town, but I do think there's going to be a rotational shift that you alluded to. So from a macro level, I think there'll be plenty of money to come into this market. And then within the market itself, I think you'll keep seeing this sort of rotation, in part for value, in part to be tethered to a recovering economy. So, these industries that really do well when the economy takes off, they've been the hottest stocks over the last few weeks, over the last month. And I think that will stay there. And of course, we'll have some bumps in the roads. And I like to see the market challenged periodically. That's how you know if the rally is real or not.
Yeah, no, absolutely. And I'm a big believer in the rotation story as well, where we're seeing that go from technology, COVID-19 plays and cyclicals. I didn't see the rotation going into names that file for bankruptcy, like the Chesapeakes and Hertz. I missed that. That's something maybe I have to read over and learn more about. But yeah, that was a little bit crazy. But yeah, that makes a lot of sense. Now, I wanted to change tunes here because this is something that's going on in the world today. Something that we're all talking about. I see you talking about on your show as well, and just dominates the news, which is the protests on racial inequality, where people of all races are coming together for something that's incredible. It's historic. I really believe that. It's sad that we need to see something tragic to happen to bring people together, right, in hopes for change. But we're seeing tons of protests, most of them peaceful. But we're also seeing people who have a different agenda using that platform to incite violence. And of course, that's what we see the most of on TV through social media channels. As someone who's such an influential person, I mean, you've worked so hard to get where you are, military background. How do you view what's going on in the world today?
Net, I think it's an awakening. I think it's been simmering, and I've been thinking something like this was going to happen for well over a decade. And almost every summer over the last 10 years, I thought we would have something. I thought we would explode like this, and to a degree that obviously there's a lot with the racial component. There's also a lot just with the division between poor and well and rich, in fact, to be honest with you, a lot of that actually drove the election of President Trump. The have versus the have-nots. The so-called deplorables also happen to be those folks that who had a son who got hooked on opioids. But the genesis of all of this gets back to lack of opportunity. So when you ship 8 million jobs to China and the factory that dad worked at is gone, dad has lost everything. And I have nothing to look forward to. And, we had a good life, that dad had enough money to put me through college. Now we can't pay our mortgage. So those kind of things have been in the Black community for a long time as well. So I think the entire nation has been sort of the simmering with frustration over this, and the elites always getting everything, and with this saving. Listen, while I tip my hat to the Federal Reserve, let's face facts: the rich are gotten a lot richer from the actions that the Federal Reserve has taken. And I don't know if there's a surgical way to make sure that the rich don't get whatever, but net, I think it's a good thing. There are some nefarious forces out there like the Antifas of the world who have been plotting for this kind of stuff and have really, really, taken advantage. And they're organized, they're well-funded, and they create havoc. It gets back to sort of the anarchism that was always sort of lingering. If you go back to the last wave of immigrants from Europe, the ones from the Southern Europe, Italy and other places, the philosophy of anarchism was one of the things we were worried about as a nation. That's why one of the main reasons why New York City had those new immigrants and other kids pledge allegiance to the flag every single day. This is your new country. So there's always been that element out there, but they're organized and they're well-funded. And I think there's enough anti-Americanism out there in this country and around the world that those kind of folks are always going to get the kind of money they need to perpetuate something that's not real. So what they did, and I don't think really was a reflective or a proxy for the more peaceful aspects of those protests or the real pain and the idea of solutions. Solutions-oriented people don't want to burn down a local Target. Now, there are going to be, people in those neighborhoods who see an opportunity, particularly young people. And I tell a lot of people, I grew up in New York City at the time of the 1977 blackout. And for those who don't know or remember it, it was one heck of an event. The entire city of New York, the lights went off. And, I went downstairs and I looked at the corner, and there was a jewelry store there, and everyone was pulling on the gate. And this one guy said, "Hey, everyone pull, everyone get something." And I was like, "Oh man!" I ran upstairs and told my mom, and she wouldn't let me go back outside. So, she's like, "No, you can't loot." I'm like, "Golly," I'm thinking it's an opportunity, right? I'm watching people, Frank, run up the street with stuff like that, I could never afford. And then there was a boom box that I wanted for 3 years. Frank, I walked by this boom box every day. It was my dream boom box. I wanted it. When I saw a kid run around the corner with my boom box, I just lost it. I'm like, you got to be kidding me. And then there was a Woolworth 2 blocks away. And I don't know why, but the group of people had grabbed a big Timex watch display. It was like 6 feet tall, had dozens and dozens of watches in it. It must have gotten too heavy at this point. So they ended up dropping it right in front of my building. And I think that's why I buy watches to this day. I've got like 25 watches. I can't help it. But the point is that, yeah, you know what? There were some local kids and young people, for the most part, who did the looting. It was wrong. For some of them, they justified it in their mind because they feel like, hey, these businesses rip us off every day. You had someone like a Bernie Sanders saying, that these same corporations are looting from you, so it's no big deal. And so that's a reflection of, unfortunately, the anti-capitalism, because in Minneapolis, the very first night of looting, some of the businesses hit were owned by Black people. And I'm talking about people who struggled and saved and scrimped and dreamed and watched it all go down. So that's part of the story that's got to be dealt with. But the much greater, larger part was the mix of people who want to do something to make this country and this world better. I think they're sincere. I think the window of opportunity is open. And I think it will be introspection, individual introspection on how there might be little things that I do that I do not even recognize that makes other people feel bad or makes their day harder or whatever it is. Just the ability to say, okay, I'm willing to learn, because I do not trust this thing with politicians. I do not trust it with the media. I think it's got to be truly grassroots, where individuals commit themselves to making this country better and themselves better citizens. Right now, I think we're on the cusp of that. I hope it can keep going.
Yeah, and I really appreciate you sharing that, because it's always a tough topic to talk about. And even from what I see, we're all behind this thing, right? We need to address racial inequality. But I am against things like defunding the police. I'm against violence. It's hard for people seeing their business looted. But sometimes even when you say that, even if I mention it on social media, like, man, we got to stop this. You're going to get the craziness. Sure. It's almost like an all or none scenario to them, right? It's if I speak out against part of that, you're labeled as someone who doesn't support the entire cause. And it seems like that's dividing people to the point where, unfortunately, you see more hate than you've seen ever in this country based on what you're watching out there, right? Because that's what everybody wants to show, because I know that gets page views, I guess.
Yeah, the social media aspect of it, the media aspect of it has been dreadful. And to your point, it's not binary. The idea is that you can't be for one or the other. I can believe that Black lives matter, white lives matter, that police matter, that small businesses matter, that we should fund the police and train them better. I can believe all of those things in my heart and know that I'm a good person.
No, that's well said. Okay, so a lot of people know you. They watch your show, Fox, Make Money with Charles Payne. But if I had to guess, few people know that you own your own research firm called Wall Street Strategies. You provide daily commentary, investor education series. You actually provide stock picks through several newsletters, right? We do here. So talk a little bit about that service and the easiest way for investors to find it.
Well, my 2 flagship services, one is designed for traders, usually buying ideas and holding them no longer than 30 days. And the other one is more buy and hold, which is more of a 3-month to 6-month hold. I will tell you, Frank, I've had to be a little bit more nimble with that. And, I've taken profits on some ideas in the last couple of weeks that I thought I was going to hold for 6 months or a year because of the volatility, which works both ways. Yeah, my biggest thing is I try to educate people. I put a lot of time into my market commentary, and I try to have fun with it. But I also try to endeavor to find things that people are not talking about. Ultimately, my goal is that people just take control of their own investing lives, and look at your portfolio. You own 6 mutual funds, but look at the top 10 or 20 holdings of them all. Let's say you have 5 mutual funds. If you looked at the top 10 holdings, a potential 50 different ideas, you'd be lucky if you have 12, 15. They give them different names, but they're all buying the same stuff, and that's why it's hard to beat the market. And so when the market goes up, you're just kind of, making it along in your pants. Don't want big fees to be average. And when the market goes down, because those stocks usually go down faster, you're actually taking even bigger losses than the broad market, and you're wondering what the heck has gone on. And so I've been lucky enough to do that for over 30 years. So it's Wall Street Strategies. My website is wstreet.com. And if anybody wants to give it a free trial, just mention Frank's name. I'll give you a free week for sure.
Awesome. I appreciate that. Okay, final question here, because my audience loves this. Everybody loves this. Can you share some of your favorite ideas in this market without giving away things that people pay for? And that can include sectors if you don't want to be specific with individual names. But I know people love you because you cover so many stocks and sectors. I was wondering if there's anything out there that you like over the next 30 days or something as a trade or even long term.
I like Sherwin-Williams a lot. I like United Rentals a lot. URI. It's a U.S.-based company, and you start talking about rebuilding. I absolutely love it. I'm struggling to find cheap stuff right now. So last week I was 100% vested in my flagship service. Now I got 20% in cash. So those are a couple names that just sort of pop out at me. They're not necessarily trading vehicles per se, but I like them for the rest of the year. And I think you got to have exposure to cloud infrastructure, but those names can, of course, be extremely volatile. But that's your next hot sector. The semiconductors, I think Advanced AMD, Advanced Micro. I love NVIDIA, but I just wouldn't ask anyone to chase it up here. I think AMD is an opportunity, though, and they've had opportunities over the last 30 or 40 years, but they always drop the ball. I feel like management's going to seize on them this time. So those are just some of the names I like.
Nah, it's great stuff. And I'm going to end with this, Charles, because I mentioned earlier where, I know you for a while. We did videos when we were on Fox, and we made sure we stayed on separate couches because we were both wide guys and it didn't look good when we sat next to each other. But, seeing you behind the scenes, there's one thing that always impressed me is that you cared, right, about mom and pop investors. And I saw that back then. I see it with your show. So to see the success you have, your own show, the audience that you have, you're one of the good guys in the business. I'm really, really happy for you. And thanks so much for taking the time to come on Wall Street Unplugged, man.
Thanks, Frank. Very kind words. I appreciate it, man. And I miss you. So call me up more often.
All right. You got it, buddy. Sounds good. Hey, guys. Great stuff from Charles. Hey, guys, I was on the TV circuit a lot, back in the day. Fox Business, CNBC, Bloomberg. And I was fortunate back then. I wasn't crazy about the media, and people don't understand where I was waking up at 4 a.m. I was working till 10 o'clock at night, 2006, 7, 8, 9. I was working for Kramer, that 5-year stretch. And waking up like 6 a.m. To go to work. And then when I was on Wall Street, and then when I was on Fox, it was like 4 a.m. because I would go there first and, get to my job on Wall Street by like 6:30. But they would come pick up a car, it was cool. Car picked me up. I went to the Fox Business Studio, Midtown, and that night they would give you 5 different topics to talk about. And, again, having the background that I had where covering everything for Kramer, all stocks, bond, everything, I was a guy that can go on and talk about anything. So they say, are these 5 topics good? And I'd be like, yeah, there might be 1 or 2 that, I'd have to research for like a half an hour and really dig into, making sure I'm up to date with everything. And then by the time he got into the studio, because the news changes and everything is breaking, the time I got on is probably like 5:30, I think. It's 6 a.m. a lot of times. Around that time I was on Fox Business. I was going on like 2-3 times a week. And before you go on, they're like, okay, we're not going to talk about any of that. We're going to talk about this. And it's tough. I mean, it's like an energy rush when you're going on, right? And it's like, oh, you're just like wide awake, right? It's great. No matter how tired before you go on, it's this adrenaline rush. And after you're done, it's kind of this massive crash because you realize you got 3-4 hours of sleep, and mentally you're just, it's tough. You're covering so many different topics. I have everything in your head. Then it's like, okay, let's switch to this. And it's taxing. It's a lot of work. And for me, I'm like, look, I just stepped away from it. And, I do media appearances every now and then, which is cool. But being on TV back then, getting the chance where Kramer just launched his show. We were there before we launched it. It was great. We talk about which buttons and different sayings. I mean, that's how long ago it was. Bye, 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 and all these things. And, it's the different sounds that he should use. I mean, that's where it was back then. And it was really cool. I mean, just providing so many different ideas from the show, anywhere we could possibly get those ideas from. It was really, really cool. But getting to know Kramer offset. I mean, having someone like this where, he was at my wedding and getting to know him personally. Getting to know Charles. I had tons of segments with him back then. And we joked at the end of that video how, we're both like wide guys and we were on different couches and stuff and talking when we're being interviewed, breaking down different markets and stocks and everything. But you don't get the chance to see these guys off a camera. And everyone's going to have their opinions, right? You're going to have your opinions about everybody. I mean, people could be the coolest person in the world. Not everyone's going to like them. They're just going to be like, I don't like that guy. It's the way it is. It's better if you don't have people that like you, because if everybody likes you, that probably means you're being fake and you're not being yourself. Because there's going to be things that people don't like. I'm outspoken. If it's a political party you like, you're going to like generally, hey, this guy knows about stocks. He really cares and stuff. That's the most important thing. But with these guys, seeing them off air, being with Kramer where he goes into the office pissed, and he's pissed because he got something wrong. Seeing Charles, the homework that he does, these are two guys that care. And I say that, and sometimes I realize, like, it might go unnoticed. But I could tell you, from someone that's been in this industry, there's guys out there that don't even give a shit. They don't care. They're going to just, whatever they can to sell you. I mean, you look at Ackman crying his eyes out on TV to take a position in Hilton. It's going on Target. Well, remember that Target position? He created a button, and you back of the button gives you a special discount. And all this, he got crushed in that. He's a great investor, but it's just there's people out there that don't care. They're going to tell you that this is going up 1,000%, 5,000%, and they're never going to report back to you, and you're not going to know what they do. And if you lose money, that's the way this industry is. It's just like any other industry too. You know that there's assholes in the industries, and people who are for real. And I could tell you from someone where you would see Charles on TV and see Kramer on TV, from a person that goes behind the scenes and sees the real people, they care. And it bothers them if they get things wrong. And that's a good thing. They're not going to get everything right. They talk about tons of stocks, right? They're going to be right more than they're wrong, or they're not going to have a TV show. But just, being able to have those guys on the podcast, interviewed Kramer a few times. This is why I had the podcast. He was doing the podcast at the street. Then it was Aaron Task. And then, I took it over from Aaron. I still talk to from time to time. Aaron Task is doing very well. But just that interview with Charles, it just shows, his character. He just finished taping his show when I did that. That was on Tuesday, doing that interview. Tuesday afternoon, and it's a half an hour, right? He gave me 30 minutes, and he wasn't looking to get off or anything. He was just like, he just kept going and going. Sometimes like, guys, I have 15 minutes, I got 20 minutes. He's, because he cares. It's just really cool to see. Again, some people might like him, some people might not like him or Kramer, and I get it. But what's important is at least these are guys that care. They want to see you make money, and they're trying to help mom and pop investors make money in a world where we're going to get to right now. Wall Street. It usually doesn't focus on mom and pop investors, and especially doesn't focus on millennials. So good segue into the educational segment, because on March 18th, Robinhood, which is the popular trading app, which allows you to trade stocks for free, which, by the way, disrupted the entire discount brokerage industry, right? Because now most of those platforms are for free. But on March 18th, the Robinhood app crashed. Okay, March 18th was when stocks were still going down, free fall. Most people looking to trade. Pretty crazy. And this outage came after several smaller outages on March 2nd, March 3rd, March 9th. Now, during that time, the company caught tons of heat for the outages. And they rightly should. You have people that have money on your platform that are looking to access it, whether they trade it or want to take it out, and it's not working. And it's not working when the market's in free fall, especially, I know you can't think about it now because everything's great and rosy and buying bankrupt stocks that are going higher. But when the market was in free fall, think about the 20% move to the 35% move downward. Hysteria. I got to get out. This is crazy. I mean, you just watch the media. Hey, it's going to crash. It's going to go in front. Just pounding you with the biggest crash we've ever seen, the fastest crash. And you're trying to get, and your app doesn't work. Imagine not being able to go in your brokerage account. And of course, Robinhood fixed the problem. Been pretty much smooth sailing ever since those outages. But when the story was in the news, the financial media especially, and even if you go on the social media platforms, Twitter, and these so-called financial gurus, they were ripping them apart. They started questioning that app, if it should even exist. And the people attacking it, it makes sense, right? This is a company that's disrupting Wall Street, that disrupted Wall Street. And guys, I get it. And I get 100% as I launched our Curzio Equity Owners Token, CEO, which is a security token that allows Curzio Research, my company, to be a publicly traded entity that offers an equity stake similar to a stock. That's going to go free trading pretty soon for anyone to buy if they want. It's always open to accredited investors at first. But there's an industry that's having trouble taking off because it disrupts Wall Street and the traditional investment banking industry, which is a multi-trillion-dollar industry. And I get it. But these platforms and these trading platforms should have been up and running, and the SEC is not really paying too much attention. Makes sense. As a financial advisor, you're my lawyer, not a financial advisor, being in the financial industry as a whole, financial newsletter publisher. And my lawyer, general counsel, will tell you, don't ever talk about the SEC. But it's not in the best interest, right? Because the SEC, it's an organization that is not that large, and you're looking at everyone who's at the top, who has the best connections, goes to the Goldman Sachs, goes to JP Morgan's, and they make a ton of money, and they have great contacts there. But why are you dragging your feet on this? This is a platform that provides a low-cost way for companies like myself and small companies to go public, to access capital. And in a year from now, which is great for investors as well, is, you'll be able to trade some of these tokens. We're having to go on, try to find different exchanges where the exchanges are getting, it's tough to get off the ground. They should have been off the ground already. But you're seeing this industry really come back after COVID-19. But I get it when it comes to disrupting industry. I get it. You're going to get attacked. They're going to be pushing against you as hard as you can. But eventually, people just want something that's better. But with Robinhood, when that app crashed, I mean, those questions that would be, should it be around anymore? Why? The one question that was not being addressed is, why did it crash? Because the reason the app was offline is because millions and millions of people were signing up to use it. And in 2016, Robinhood had 1 million accounts, which is amazing by itself. By 2018, it had 6 million. To put that in perspective, that's more accounts than E-Trade at that time, which had around 5 million. By the end of 2019, those accounts grew to 10 million. Today, they're over 13 million, probably more like 15 million. But 13 million as of May. How do I know that? Because Robinhood just did a capital raise. They raised 280 million, get a private raise. And that was in May, which values the company over 8 billion. They said that this year, which was May, they had 3 million accounts. And I'm sure since then, they have over 50 million today. Now, why is this a big deal? Because you're looking at 15 million brokerage accounts. This isn't people signing up to something that's for free or a social media platform where they could post. And you're putting money into an account. But why is it such a big deal? Because most of these accounts are millennials. This is the younger crowd signing up to learn about the stock market, to trade the stock market. So the reason why this app was crashing, again, which nobody really focused on or asked, was because seeing an enormous amount of traffic as millions of new accounts were being opened. And these people were looking to trade. I've been in this industry, I say it a lot, for over 25 years. I've seen everything behind the scenes, the media behind it, dealt with so many different companies, great contacts, institutions, you name it. And if you're a millennial, which I know you get criticized all the time for not working hard, for getting things handed to you, for being more of a rental crowd than an owner of assets crowd, Wall Street has totally ignored you. In fact, they don't give a shit about you. Why is that? Because they can't make money from you. For example, in the financial newsletter industry, in my industry, the average age per subscriber is around 60. It's lower for us. We track a younger audience. But why 60? Because these are people who are either retired, close to retiring. They have the time to read a bunch of newsletters. They're sitting on a lot of money from their retirement from working so hard for 20, 30 years, which if you're a millennial, believe me, millions of dollars sounds like a ton of money for you. But by the time you retire, if you really have your 401ks and you're adding to those all the time, especially you have companies, some companies that still match, and that stuff accumulates. It accumulates quick. It does. So financial firms, of course, love to market to these people. It's not just the financial newsletter industry, but it's investment banking firms, mutual funds, the big Wall Street outlets, insurance companies. I mean, they all focus on the older investor. That's where the money is. And you filter down, say teachers, policemen, firemen, they all pool their money together into pension funds managed by whatever, CalPERS, which is the California Public Employees Retirement System, the New York State Local Retirement System, New York City Employees Retirement System, you name it. But all these state pension systems, which have billions and billions and hundreds of billions of dollars in them. And what do? They have companies like Goldman managing them, BlackRock, Vanguard, State Street, Fidelity, Bridgewater, Renaissance, T. Rowe Price, Northern Trust. I mean, I can keep going on and on. UBS, BNY Mellon, JP Morgan, Morgan Stanley, Janus Schwab. I mean, you guys get the point. It's a boys' club. And to get in it, you have to be filthy rich. Or you have to have your money managed by one of these big retirement systems, and you'll have access to these things. They're not going to give access to you. There's a reason why you guys didn't sign up on E-Trade, Ameritrade, and all these, because they really don't care about you. Yeah, maybe you open up an account with $1,000, but how much are you going to really trade? It's not worth it to them. But now it's like, wait, not so many people are going to sign up because Robinhood, you could trade for free. We got to do the same thing that they're doing. Again, disruptive. But none of these major institutions give a shit about millennials. They don't. And you know what? It needs to change. For us, Curzio Research, we're going to make a big commitment to start helping you. Start helping millennials. And these are the people, if you're serious about learning how to invest. Now, I know since so many of you, millions of people, again, we get the Robinhood statistics, started opening accounts, been trading over the past few months. I know you think you're a genius because you invest in a market where everything is going up, and even companies that file for bankruptcy, right? Unfortunately, that's not how things work. It's working now, but it's not going to work later. And this is the kind of stuff I saw during the 80s. After the first Wall Street movie was released. I mean, it had the opposite effect, right? Oh, this guy's going behind the scenes and robbing everybody and, try to get inside information. It had the opposite effect of what everybody thought because it led to everybody wanted to work on Wall Street. Then we saw the 87 crash. The late 90s, technology. I mean, these are markets that I was in. You're excited about. Everything's going higher. You're buying it. You think you know more than everybody. You're a genius. So the market crashes. 2006, 2007. I can't tell you, millennials and that were real estate agents just selling anything. It didn't matter. You need a library card. You could get a fake library card and you got a $600,000 loan for a mortgage. Why? Because you would take that mortgage in, make commission on it, throw it to Fannie and Freddie. Nobody cares. There's no risk. Well, we all know what happened. Investing in the stock market, seeing everything go higher and surge into 2007. And then we saw the collapse in housing, which basically was the credit crisis. When you're looking at the market, it sucks in young people at the wrong time. It's going to make you look like a genius. But then it's going to take every single penny from you. That's how Wall Street works. Everything. If you have 5 cents in your pocket, they'll take it. And your pants. That's how Wall Street works. I worked in it and been in this industry. I worked on Wall Street across from the New York Stock Exchange. That's how it is. It's cutthroat. Billionaires love destroying other billionaires, not because they want to get richer, because that's them. That's their personality. It's normal. It's human nature. I'm not telling you all this because I'm some genius. Unfortunately, I'm speaking from experience. Because I was in the markets in the 90s during the tech bubble. I didn't lose everything because I had, my dad passed, over 15 years ago, who was one of the best money managers at the time on CNBC all the time, over 20 years experience at that time. He was there to say, son, don't be an effing idiot. And yes, he used that word. He said, listen, be smart. You invest in a lot of this technology. It didn't make sense, but take a little bit off the table. And through 1999, I'm like, he doesn't know what he's talking about. I could run this business. I'm great. Don't worry, Dad. I know exactly what I'm doing, just like any millennial would say, because you're at that age where you think you're the smartest person in the world. You're the best athlete in the world. You have the biggest you-know-what in the world. And that's normal. You're supposed to think like that. That ego is great. Because when you hit 35, 40, you're going to realize, wow, I really don't know shit, because you talk to brilliant people, and it makes you want to learn more and educate yourself even more. But I want to start helping you, having more educational videos, which will be live through our YouTube platform on Curzio Research. Ready to create a super low price newsletter for you. It's called the Dollar Stock Club, where I take ideas from all the guests I interview, including Charles today. And these are not just companies they mentioned in the interview, because like Charles, I'll talk 15 minutes before and say, hey, how's everything going? Okay, ready to go. And we'll talk about the markets and everything, and even afterwards. So some of these ideas I get offline. I'll have a one-page write-up. It's like a report on all these new recommendations, and put them in a portfolio for you to track. In the past few weeks alone, for Dollar Stock Club, those picks include Interpublic from John Petrides, up 37% in 6 weeks. Carnival from Tom Lee, and very popular name, mentioned on TV, had him on the podcast, interviewed him. 45% gains on Carnival. That was 5 weeks ago. Frank Holmes, 2 weeks ago. We talked about U.S. Global, his Jets ETF, JETS, the largest airline ETF. Why Buffett made a big mistake getting out of these things. That ETF's up 35% in 10 days. These are the stocks that we're giving. These are from my guests, ideas that people pay a ton of money for. Not the Dollar Stock Club. I also, and this is what I would love to do, have to think about it more, make sure I have a little time for this, because I never do anything half-assed in my life, which is sometimes a problem. Whenever I try to do something, I try to be the best in the world at it, which means total focus and attention, which is not always a good thing. Doesn't lead to you just having leisure fun. It's, I got to be great at this, or I don't want to play. That's just my personality. But I want to create an investment clinic. Maybe take on 10 students. Throw you guys right into the fire. Teach you everything I know. Every methodology, value, growth, technical, large cap, small cap, income, options, everything I've learned. Top-down approach, bottoms up. Because you're going to need to know different styles of investing. Right now, technical analysis is great, but anyone going on there talking about value is out of their mind, because value doesn't matter right now. Value doesn't matter right now. When you look at Shopify trading at what is it? I forgot what it was. I think it was like 12,000 times earnings or something like that. I mean, it doesn't matter valuation right now. You're going to say, well, this is cheap. You might find a couple of cheap stocks, but there's a reason in this market if they're still cheap. It's because they're terrible companies. And yeah, they're going to play catch up. Let's buy the worst industry, like everybody went on and shouted autos the past couple of autos. They didn't participate. Everybody rotate that money into autos. That's good for this week. Next week, let's see what the next sector is. There's also bankrupt companies. Throw them in there. That's it. Hertz went from $1 to $5, $6, I think. Crazy. but teach you all these strategies. And guys, I'm going to throw you right into the fire. But before you sign up and get excited, just know it's not going to be a cakewalk. I'm going to be screaming on you. You're going to be working harder than you ever had. And the second you stop, I'm throwing you out of the program. But I would love to do this. Create that type of clinic. Those with YouTube followings. Help you get more exposure through my Wall Street Unplugged podcast by interviewing you, because there are a lot of YouTube people out there who are in financial industry that have lots of people following them on YouTube. It's amazing. Anyway, my podcast, Wall Street Unplugged, thanks to you, still one of the top investment business podcasts in the industry, outside of a show like, the Kramers or the Charles Paynes and stuff, where they just take that show and throw it into a podcast, where, it's only formatted this for a podcast right now. And we're going to be doing videos through our Curzio YouTube channel, where videoing all these podcasts. But I want to be that voice, especially for millennials. And why? Why would I do this? Because I was fortunate. I mean, I had my dad to be that voice. Let me know when I'm being an idiot and not being too arrogant, not being too greedy. Because you really don't know, especially, you get people who invested in the market since the credit crisis, and all they saw was a market go straight up. And now they just saw this crash and said, wow, the markets could crash. But wait, they always jump back right away because the Fed bails out. You're being conditioned a certain way where there's a lot of risks in the marketplace. There's a reason why the greatest investors in the world, Drunkamiddle, Will Singer, David Tepper in the past 3 weeks saying it's one of the most dangerous markets they've seen. It is incredibly dangerous. You don't care right now because everything's going up. But it's not always going to be that way. It's like if you're playing golf. There's times when you go at the hole, and there's times that you don't, where par is a great score. And you want to get par, but when the opportunity presents itself, go after the flag and go for that birdie. It can't be going for the birdie every time, because you're going to hook it in the water. You're going to be off the green, put yourself in bad spots. And unfortunately, when you talk about money, if you get into the wrong spot, especially if a market crashes, you lose everything. And then what happens? You can't participate on the way up. So you don't get to be wrong. You don't get a second chance. You don't get, hey, well, this is a great lesson. No, you get crushed, and that's it. And believe me, Wall Street will crush you. That's their job. That's what it does. I remember going to conferences in my 20s, and all the people who gave me time, like Mario Cabelli, actually, Rafael Campora, Bill Griffin on CNBC, and Sue Herrera used to say hi to me when my dad was in the studio about to go on CNBC. Rick Rule, when I first started at Stansberry. Rick Rule is a god in the mining industry. I sat down, asked him questions. He spent half an hour with me, 40 minutes with me. Now it's my way of giving back. Hey, you want to come on the podcast? What can I do for you? Kramer, yes, I worked for him, getting to know him close. And hey, went to my wedding. I mean, that stuff, you'd never forget it. You never forget it. I mean, I'm a big character guy, which is why I hate politicians so much. And some people hate that I talk politics or whatever. I try to be as fair as possible. But what are we seeing now? For me, again, character's a big thing. So you see people taking pictures in front of churches holding the Bible to target the conservative vote. Or politicians kneeling together in a masturbation hall like you give a shit about racial injustice all of a sudden. And great job getting the photographer to take the perfect picture of you so it goes viral. If you care, you wouldn't have anyone taking pictures. You just do the right thing. And look, this election is very, very close. Minority vote is huge. A millennial vote is huge. At the end of the day, these politicians, they don't give a shit about you. They give a shit about themselves and power. And a good example of that is Bernie Sanders. There's a reason why Trump was not really saying anything bad about Bernie Sanders. Oh, I kind of like him, And there's a reason why the Democrats were destroying him. They wanted to get him out of there. And yes, some of his policies were insane, but a lot of the millennial crowd followed him. But now it's funny because you had both parties found ways to attack, destroy the guy. But isn't it funny how the people who pushed him out of the race are now really playing nice with him? Okay, Bernie, everything's cool, this and that. You just destroyed the guy. You made sure he got him out of the race as quick as possible. Why are you playing nice? Because his following could determine who the next president's going to be. And that's the truth. You guys can hold up signs. You can do whatever you want when it comes to Wall Street, whatever. or politics and just start caring about you. Start caring about you. That's what matters. You getting a home, building assets, right? It's your life. It's your wealth. And see so many millennials figuring that out more than ever. Millions of you opening up brokerage accounts at such a young age, learning about investing, learning how to become owners of assets, which creates wealth. You could bitch and say, wow, all these bailouts, the rich get richer. And you're right. Charles talked about as well. That's the way the policies are structured. Low interest rates is going to inflate assets. The rich are going to get richer. You could bitch, you could hold up a sign, you can complain, or you could buy assets. You could build your wealth. You can still complain about it and write signs and do whatever you want. But instead of fighting something that is probably not going to change, I'm not talking about the racial injustice part. I'm talking about the wealth inequality, the way the system is set up. Instead of complaining, use it to your advantage. Again, learn how to become an owner of assets. That's how you become wealthy. But it's pretty amazing to see this being done right now. I've never seen this many millennials getting into trading. And it is dangerous. It's a crazy market, and people are going to make fun of you who know the market and say, oh, these guys are going to get crushed because we've seen it before. But learn from this. With Curzio Research, we're going to be focusing on you. And continue to have lots of free products, low-price products to get you started, educate you, teach you everything I learned about stocks for the past 25 years. And the only thing I ask in return, the only thing, dead serious, pass it on. When you make it, pass it on. When you have a successful company, you become an influential person, you have lots of followers, just educate the younger generation. That's how we make the next generation better, and not into a generation that you guys are in where you're filled with student loan debt. Few opportunities. You guys are in a massive hole that's close to impossible to dig your way out of. And this happens before your career even begins. It's insane. But that's all I want you to do. It's the only thing I ask in return. Because I'm telling you, everybody that helped me get to where I am today, especially when I was young and asking stupid questions and learning, those people that helped me, I'll never forget them. And now I'm in a position to help them, and I helped a lot of them. And that's the way the world works, because that builds character. That's what you remember, the people who helped you. Okay, when you're rich, everybody wants to be your friend. When things are bad, and the people that help you when things are bad, those are the people you can count on for the rest of your life. I'm not, being philosophical or what, but it's true. And that's how you determine who your great friends are, right? When things are bad, who's the people that are there for you? Because you're going to be surprised. I learned this how many companies have I talked about and helped the management teams throughout my career? And then when I launched a token, I said, hey, guys, if you want to invest in it, nobody. The amount of people that I thought would definitely invest in it, they didn't even read the prospectus or read anything about it or see what I'm doing. I found that pretty amazing. And I loved it. Why? Because I'm going to make every one of them pay by making this company one of the biggest in the industry and making that token quadruple, go up 10x, 50x in value. This way I could tell them, hey, look, I put it on your desk, but you didn't really have time. It's amazing. I had time for you. I learned about your companies. I do a lot for you guys. So that's why I want you to pass it on, because believe me, the people you pass it on, those people will become bigger and bigger. But that's how you make the next generation better, by passing it on. That's all I ask. So that's my promise to you, to help you guys out. I always keep my promises. You just ask my two young daughters, who never forget when I promise. I'm going to jump in the pool with them after work or go on a bike ride with them. They're going to remind me and text me all day, coming home, going to the pool, going to the pool. Trust me, when you have kids, they'll always hold you to every single promise that you make, which is awesome. But I always keep my promises, and I promise the millennial crowd at Curzio Research, we're going to help you. Going to give you everything I got, 25 years of experience, and really help you. Do educational videos, everything. You're going to see a lot more live videos, all this stuff. If you have any questions or comments or any ways I can help out, let me know. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. Okay, guys, so I'm really excited about a Curzio Research YouTube page. I say this all the time because we're starting to really build a big following through it. It's thousands. We really started promoting it, really getting into it 3-4 months ago. But with the technology and the money we put behind it and all the help that we've got from great, great people like the person who's taping this podcast right now, we're able to create videos that almost better than CNBC quality right now, where we could interview guests anywhere around the world. We have technology with dual screens. You can see me only, him, and we could bring up websites. We just did that with Arash Adnani. I wanted to do that with Charles Payne, but Charles Payne really just got off his show and really couldn't get to a computer to get that done. So, we did that interview by phone. But going forward, you're going to see more of a video format, which is really, really cool. I just like, audio format's great. I know this podcast was built on that, but just having that video feature. Not only that, all the videos I do during the week, like 2-3 minute videos. If I see something, I'm just doing a live video. You'll see me in a t-shirt sometimes because I'm going to work out. All that stuff on video. You can watch media appearances. That all gets uploaded to a Curzio Research YouTube for absolutely for free. If you want to subscribe. But just building that up and that video format has been amazing. We're getting tons of positive reviews on it, and I'm happy, and we love doing it because this world is turning to video. Even our newsletters are video. We also offer the PDF version of the stocks we recommend, but I'm doing video segments now for Curzio Research Advisory, for Curzio Venture Opportunities, and those videos are like 30 minutes long. Sounds long, but I'm not just giving you a recommendation. I'm sharing my screen, showing you how I found it, what metrics I'm using, going into the details, educating you. Because the newsletter industry is more about just giving you a stock pick. Trust me, I know that. I've been in this industry my whole life. It's about education. And it's a reason why I was doing daily videos when the market was coming down and crashing. Now I'm doing them once, twice, 2 to 3 times a week. You don't really need me when the market's going up every single day, right? But during those times, that's when we're here. That's what you pay me for. But all those videos get uploaded to Curzio Research YouTube page. Also, feel free to follow me on Twitter, which is pretty easy. Just tweet me, Frank Curzio. But those are 2 ways to get in touch with me, as well as through my email, which is frank@curzioresearch.com. So guys, thanks so much for listening. Really appreciate all your support. And as always, I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.